Hey there, and welcome to your guide to home buying costs in Texas. I'm Chase Hansen, your DFW Realtor. I serve buyers and sellers in the Dallas-Fort Worth Metroplex, and one of the number one questions I get when sitting down with a new buyer client, whether they're a first-time home buyer, moving up into a larger house, or moving into town from out of state and are just learning how the process in Texas differs from the state they came from, the number one question is how much is this actually going to cost? No one wants to be surprised by the bill, especially when it's something you're emotionally invested in, like a home for your family. That either leads to disappointment or worse, being pushed into tight or dangerous financial positions. I believe that the best way to serve my clients is to make sure they're informed and protected as they step into a purchase as big as a house. So that's my goal for this video, to give you real info to work with so when you're ready to buy a house, you know what it's actually going to take. Here's where we're going in this video. First, common mistakes and what it takes to get a loan. Then how much do you need saved to actually move in, so closing costs break down. And then important next steps. One of the most common mistakes I see with anyone stepping into the housing market, and especially with first-time home buyers, is assumptions. Anytime we're jumping into something we don't fully understand, aren't experts in, but we assume we have under control anyways, we're opening ourselves up to mistakes that can burn us in the long run. This is true in all of life, and it's true when buying a house. There's a reason there's professionals licensed in this field. And when you've got good people on your team to work with you and walk with you, it can save you real heartache and real money to trust your advisors, not assume, and ask questions. The two most important professionals to have in your corner before you start looking for houses are a real estate agent and a lender. Your realtor is there to represent you, coach you, and coordinate all the parties and process to make sure you get your goals. It's not just opening doors, it's negotiations, legal contracts, making sure every important step of the process is followed so you're protected and taken care of. You need someone on your team for that. And in Texas, it doesn't cost buyers anything to have an agent. That fee is factored into the seller's closing costs, which means if you don't have an agent, you're not saving money, and you're actually at a disadvantage because the other team has someone representing them, but then you don't have an expert representing you. You need your own representation to make sure you have what you need. And then you also need a good lender. Here's the things I look for in a lender. Go to an individual working out of a mortgage-specific bank or brokerage. You want someone who will answer you quickly when you call, text, or email them. Don't go to a big bank or fully online service. Just because you keep your checking account there doesn't mean it's going to be great for a mortgage. Real estate transactions are time dependent, and you want someone who has easy contact with their underwriters, can push things through quickly, and can take care of you as an individual to problem solve and make sure you close on time. Every transaction has hiccups and bumps in the road. You want a lender and agent team that can communicate with one another and solve those problems to keep things going smoothly. So, what does it take to actually qualify for a mortgage? Lenders look at four big pieces when they're pre-qualifying something. Those are your debt, income, credit, and savings. Pre-qualification is when your lender looks at your finances as an overview and says whether those big things indicate you can qualify to buy a house. That's before underwriting and before you are actually looking at houses yet. Now, in our market in Texas, you need to be pre-qualified before you start looking at houses. There's two main reasons for that. One, pre-qualification tells you what your actual budget limits are. So again, not working from assumptions, but a real cost analysis. Two, most sellers will not consider an offer without a pre-qualification letter attached. People want to know you're a serious buyer, and that shows them that you have all your ducks in a row. So let's break down those qualification factors real quick. First, income. A lender wants to see you have a steady income that's likely to continue. Typically, what that means is that you've worked in the same field for several years, that you're in a job with a set income. So people who work 1099 contract work can sometimes have trouble qualifying for traditional mortgages for that reason. I'm in that category, so I get it. There's options out there, but this is why it's important to clarify those things beforehand. Second, debt. Your debt to income ratio is a big factor in what you can qualify for. A lot of lenders work from the 28-36 rule, so that means they don't want your mortgage to exceed 28% of your monthly income, and they don't want your total debt to exceed 36% of your household income. And when you're getting ready to buy a house, you really want to limit any new debt you're taking on, because those limits can really impact what you can afford in a house. Third, credit. Typically, lenders need to see a minimum of a 620 credit score to qualify for a conventional loan. Now, that said, walking the line of minimum can limit you in other ways. Your credit score can limit your debt to income allowance, impact your private mortgage insurance costs if you're using a lower down payment, and surprise changes can hurt your ability to qualify at all. So, stronger the better. Fourth, savings. Lenders want to verify your available savings and assets to use for down payment and closing costs. Now, we'll talk about how much you need saved in our next section in just a minute, but one thing we see a lot of people do is get gifts from family members to put towards their down payment. Now, that is perfectly fine. Just wait to receive that and talk to your lender to see what the process for recording that is. Lenders want to know where any large deposits or gifts came from. So a lot of times they'll ask for a letter to be submitted with the gift to acknowledge the source, and sometimes ask for a bank statement from the giver. All these factors are to prevent mortgage fraud and make sure the person getting the loan can afford the loan. Now let's talk about that actual number. Before we move on, if any of that first section was helpful, would you consider liking this video? That helps my channel and allows more people to find this content. I'd really appreciate it. Now that we've talked through some of the basics of starting the process and getting a mortgage, I'm going to walk you through what it actually costs to buy a house. I'm going to break down what portion is down payment and closing costs, and I'll go into detail on what closing costs actually are, and then what the monthly payment would be once you're actually in the house. My goal here is for you to have a real understanding of what makes up that balance sheet when you bring your final check to close on your new home. The way I'm going to do this is by giving you 3 case studies. Now, every house is different, every buyer is different, and so the specifics will be different. But I think this example will be a helpful baseline for you to work from and get a sense of how this would apply for you. These case studies will all be based on a $350,000 purchase price. That's a pretty common price for a house in the DFW area. And the 3 case studies I'm going to give you are based on the cost for a 5% down payment, 10% down payment, and 20% down payment. Let's jump in. So our first case study is for a 5% down payment on a $350,000 house. Now, some people watching right now might be surprised that you can buy a house with a 5% down payment at all. It's actually the most common one I see, especially with first-time home buyers. Now, the pros of a 5% down are obviously less money up front, but the trade-off is that you have higher monthly payments and own less equity in the house when you want to sell a few years down the road. Let's break that down. For 5% down, you're bringing $17,500 as your down payment, and then you'll likely have about $10,500 in additional closing costs. 3% is a pretty typical number to plan for in addition to your down payment. I'll break down what it goes into that in a second, but that would make $28,000 in upfront costs. And your monthly costs, which I'll also break down, would be about $2,927 per month if you had a 6% interest rate, which in 2023, when I'm recording this, is likely to be a range you'd see this year. Let's break that down. First, the closing costs. You have $17,500 as 5% of the $350,000 home price. Now, lender origination fee is typically about 1%, although you can shop lenders to see who has a rate you prefer. That's $3,500. Appraisal cost is typically about $700. Title and recording fees are usually 0.6 to 0.9%, so we'll put $2,800 for that. And if you need to buy a new survey, that's typically about $500. And then you have prorated taxes for the year. This will change depending on how far into the year it is in the specific house, but we'll use $2,500 as middle of the road filler number. And then your inspection costs are typically about $500. All that comes out to $17,500 down, and then $10,500 in additional closing costs, making $28,000 for your upfront purchasing costs. For your monthly payments, we use what we call PITI, principal, interest, taxes, and insurance. At a 6% interest rate, your principal and interest for a $350,000 house is $1,994 per month. Your taxes at a 2.5% rate are about $87.50 a year, but with a homestead exemption, the tax exemption if you're living in your primary residence is 20% off, so that's $7,000 per year, which breaks down to $583 a month. For insurance, you could expect about $2,400 per year or $200 per month. In this price point in DFW, it's not typical to have an HOA, so don't have to worry about that. What you do have to factor in for a 5% down payment, though, is private mortgage insurance, or PMI. Now, this is required on a conventional loan if you're putting less than 20% down. And it goes away automatically once your equity amount, the amount of value you own versus what you owe, reaches 20%. Your PMI is probably about $200 per month, although this can vary depending on your credit score and your lender. But those all added up make that total escrow monthly payment of $2,927 per month. So it's good to remember that that includes your taxes and homeowners insurance. But that's our case study for your costs on a 5% down payment for a $350,000 house. The 10% and 20% should go a bit faster now that we've defined some terms, but go ahead and drop a like if you found that helpful. Now let's look at a case study for a 10% down payment. We see 10% down payments more commonly when someone is moving up into a second or third house because they're taking the equity out of their first house put towards buying their next one. For down payment, 10% of $350,000 is $35,000, and then closing costs are still about 3% or $10,500, the same as when we were looking at the 5% down. So $35,000 down plus $10,500 in closing costs comes to $45,500 as your total upfront costs. Again, you can find the breakdown of those closing costs in the previous case study because those numbers don't change with a different down payment. The monthly payments with 10% down, still working from a 6% rate, are about $2,772 per month. Now, let's break down the pity on that real quick so you can see why that goes down. The principal and interest come out to $1,889 per month, and that's because the amount you're borrowing has gone down, so there's less to pay off over that 30-year loan. Taxes don't change, so still estimating $583 per month. Insurance doesn't change, so still estimating $200 per month. What changes is that private mortgage insurance. Because you're a less risky loan with more down payment, that tends to go down with a 10% versus a 5% down payment. I'd estimate about $100 a month for PMI on a 10% down, but again, that can vary with your lender and your credit score. It's also worth keeping in mind that the PMI still goes away when you reach that 20% equity, and you're a lot closer when you're starting at 10% equity instead of 5%. So that can happen a lot sooner. All that comes together in your pity to make $2,772 per month. So you're spending less per month and you have more of an equity stake in your house. Finally, let's look at a 20% down payment on a $350,000 house. 20% is the ideal lenders want to see, but like we've talked about, you can start lower. In fact, you can get as low as 3.5% down payment if you have a great credit score, but 20% is the preference for lenders, and that reflects in the fact that they have the lowest monthly payments and the most equity because it's not as risky of a loan to make. So for down payment, 20% of $350,000 is $70,000, and then closing costs are still that 3% or $10,500. So the closing costs stay the same because they're impacted by the sales price, not the down payment. So that $70,000 down plus $10,500 in closing costs makes $80,500 in upfront costs. And then the monthly payments for 20% down, still working assuming a 6% rate, are about $2,462 per month. So that breaks down to $1,679 per month in principal and interest, $583 per month in property taxes, and $200 per month in homeowners insurance. No PMI when you're putting 20% down. That's how we come to that $2,462 per month. So the most down means the most affordable monthly rates. Those were our 3 case studies for down payments. Next, we're going to finish by briefly looking at next steps for people who are looking to buy and put this knowledge into action. But first, again, if you found any of this info helpful, I would love it if you liked this video, subscribe to my channel if you haven't already, and maybe send this video to a friend if you think they'd find the info helpful. Okay, for our final section, I want to talk briefly about your next steps if you're a person who plans to buy a house at some point. One of the reasons I made this video is because one of the most heartbreaking things I see is when someone jumps in too quickly, they find a house they absolutely love, and they thought they had enough saved because they have some money set aside for down payment, but they haven't dug deep into the numbers yet, and it turns out they can't actually afford it with closing costs, and that excitement just gets crushed. It happens a lot because a lot of people aren't informed on what goes into closing costs, and many people don't know what questions to ask their agent or lender. I hope this video has given you a little bit more context so you can plan well and be ready, because I truly believe in the value of homeownership. I've seen the way it helps families build wealth and a stable foundation, and there's a real joy and freedom in owning the place you live and not being subject to the whims of a landlord. It's worth it to take that step into homeownership, but you need to actually be able to afford it so you're making a wise decision when you buy. So if you're a person who homeownership is a real goal for you, or if you're gearing up to move into your next house, here's 3 main next steps for you. I'm putting them in order of what I actually think will set you up the best. The first step is to partner with a realtor you trust. Now, the reason I start there is because a realtor has an overview of the whole story. We oversee the process from beginning to end, and so having that conversation on the front end gives you a resource to help you ask the right questions and take the right steps. If you're in the greater Dallas-Fort Worth area in North Texas, I would love to be that resource for you. Even if you can't buy for a few months or a few years, I'd be happy to sit down with you for a buyer consultation to see where you're at, what your goals are, and help you start on the right track. No obligation and no charge. I work with buyers and sellers all over DFW, and I'd love to serve you. The best ways to contact me are either emailing me at chasehansen@remax.net or following me on Instagram at Hansen Realtors DFW and sending me a DM there. I'd love to connect and see how I can help you. And even if you're not in DFW, I'd be happy to connect with you and help you find an agent to work with wherever you're moving. Just reach out. The second step is to connect with a trustworthy lender and get pre-qualified. If you need a recommendation for a lender in the DFW area, I know some great ones who I know take great care of our people. Talking to a lender will help you know where you're at. Walking through the pre-qualification process now, even if you don't plan to buy for a while, helps you see what you can do to set yourself up for success. Maybe you need to improve your credit a few points. Maybe you need to save a little bit more. Maybe if you pay down a certain amount of debt, you'll be positioned better. A good lender can help you look at those factors and make a plan to meet your needs. The third step is to start saving and tracking towards meeting those financial goals to buy a house. Saving your planned down payment percentage plus 3% for closing costs is a great place to start. A lot of times I've found that having a real goal that you're saving for can be a big motivator in making that a reality. Hopefully this video helps you set some real numbers to aim for. And again, when the time comes, I'd love to be the realtor that helps you find the right place if you're in DFW. Thanks for watching. Again, my name is Chase Hansen. I'm a real estate agent with RE/MAX Pinnacle Group serving the greater Dallas-Fort Worth Metroplex. If you want to contact me, the best ways to do that are emailing me at chasehansen@remax.net or reaching out on Instagram at Hansen Realtors DFW, where you can follow and DM. Be sure to subscribe to this YouTube channel to keep up with all the great content I'm putting out, like monthly market updates, local highlights, home tours, and real estate pro tips like this video here. Like the video if you haven't already, share with a friend. Thanks again for watching. I'll see you next time.